Hey everyone, Jim Park here, your rental funding pro. Thank you so much for joining me today. And today I want to talk to you about a segment in the rental market that most investors really aren't talking about. You know, a lot of times we talk about investing in a single family residence, 2 to 4 unit, which are great. You know, those are timeless investments that do well over time. But there's a segment in the market that most investors really are not looking at, and it's the short-term rental market. Okay, better known as Airbnb. You know, after the economy started to open up, most people are wanting to travel. They're wanting to get out. So this segment of short-term rents is absolutely booming in terms of profitability and also long-term growth. You know, it was kind of like, okay, when the lockdown happened, we didn't know what was going to happen to Airbnbs, in short-term rents. You know, a lot of places were not allowing them, whatnot. But things are changing, and they're changing quick. And I'm going to show you, based on numbers, why this is a segment you definitely want to get involved with, okay? So with any type of investment, diversification is the key, right? You want to hedge against a downturn, but you also want to participate in the appreciation of a market that most, competitors not in right now. So I'm going to show you how this is something that you can get access to right now. I've got amazing lending programs that a lot of banks and mortgage bankers aren't even looking at. Okay, so I'm going to show you how you can get involved with this, whether you're a first-time investor or a seasoned investor. This is something you definitely want in your portfolio. All right, so I'm going to show you how this works and how you can participate and take advantage of it as well. Okay, so here I am in Miami Beach, which is a very beautiful area and a very profitable location for short-term rents, Airbnb, whatnot. But there are other parts of the country right now that you would never think that is just as profitable, but also easier in terms of investment opportunity because the acquisition price is much cheaper, okay? So yes, Miami Beach, Orlando, places like Hawaii, things like that are really good in terms of cash flow. But I'm gonna show you a couple of places that you would never think would also be just as profitable, if not more. Okay, so let's go over some numbers and do an analysis based on the difference between your short-term rental via Airbnb or your traditional 12-month lease. Okay, so here's a property currently active, listed for sale here in Orlando. It is listed at $369,500. It's a 4-bedroom, 2-bath, and this would be your typical single-family residence that you would invest in and put a 12-month tenant. Now let's look at the difference between a short-term Airbnb and your traditional 12-month rental situation. Now, just right off the top, you can see the market rents for a 4-bedroom, 2-bath house on a short-term rent in Orlando is $400 a night. Okay, this is what the going rate is. Whereas compared to a 12-month lease, you're looking at about $1,800 in terms of rents for 30 days. So it's about $60-some per a night. So right out of the gate, you see the difference just in the variance of a short-term and long-term. Your expenses are going to be pretty much the same depending on how you acquire. Now the cash flow, look at the difference in cash flow right here. This is the bottom line number that you're looking at on a monthly basis by going short-term and traditional. Now remember, this is also based on just renting it out for half the month because Florida is typically a seasonal location because in the summertime it's kind of hot. In the wintertime is when your peak season is. So just out of the gate, even if you were to occupy it half the time that you would a traditional, you're looking at a 30% positive cash-on-cash return compared to a negative 6.5%. And the cap rate difference is tremendous. And also a 10-year payback balance. So in 10 years, if you were to continue this model, you're looking at 189,000 positive compared to 144,000 negative because you have that much less cash flow coming in. Okay, now when we scroll down here, okay, you can see that these numbers are based on 146 days on Airbnb, as I mentioned, because Florida being seasonal. Now, if you were to rent it out longer, then these numbers would be even higher. But just to compare apples to apples, this is what we're looking at depending on the market and the region. So even at half the time that the property is rented, you're getting, 30% higher return than your typical traditional tenant. Okay, so right out of the gate, you can see the difference in overall numbers. Now, if you look at long term, so let's say 2032, you're looking at a positive 214,000 on the Airbnb short term, whereas traditional, you're still in the negative because you have a negative cash flow for the long term. Okay, so now let's see what Airbnb occupancy rate you can expect in 2021. And we looked at Orlando just as a vacation destination, but when you really look deep into how this works, look at the markets that is going to see the biggest growth. Like they're smaller markets like Little Rock, Arkansas, Bakersfield, California, Fayetteville. I mean, El Paso. These are all smaller markets that normally you wouldn't think Airbnb would do well. A lot of times you come down and go, hey, I think a vacation area, even like San Francisco, come to Orlando, once again, 52% occupancy because the region and location. Tampa, Fort Lauderdale, you would think that these would be, longer in occupancy, but it's not because of the area. Even Scottsdale, Arizona, once again, it's the slow season during the summertime, but it's the peak season during the winter, so it's seasonal. So you would think that a lot of times, like Miami, Georgia, most people would look here. But when you look at the data, these are the markets, these small markets that have a massive opportunity. And this is that blue ocean that I was telling you about. So let's look at an example. Okay, so here is a property that's currently listed for sale in Little Rock, Arkansas. It's listed price at $199, 4-bedroom, 3-bath, 1,800 square feet. So the current market rate for Airbnb is $166 a night compared to $56 and $1,500 a month on your traditional 12-month lease. And look at the cash-on-cash return. So you have a 19% return compared to a 3% return, and the cap rate is definitely different depending on whether you go short-term or long-term. And a 10-year payback, you're looking at $400,000 compared to $67,000. Now, Little Rock, Arkansas is not as seasonal as Florida or Arizona, so you're going to have occupancy close to a regular tenant. Okay, so you're going to have 325 days on the average of occupancy for short-term along with 332 long-term. But look at the difference. Look at the difference in terms of revenue. Okay, you're looking at almost a 20% return compared to a 3% cash on cash going your traditional route. Okay, so these are the examples that, a lot of times we would promote this as a single family long-term, but short-term actually is something that is very viable and makes a lot of sense because based on the data, okay, based on the occupancy, what we can expect in 2021, Arkansas tends to be number one, which I don't know, but hey, I'm not going to argue with data. Okay, so there's an example there. Now, also, here's an example, 8 best cities for Airbnb investment in 2021. And once again, we're looking at small cities, San Angelo, Texas. I mean, this is not Dallas or Austin. This is a small city. Median price is $360, and then you have your average daily rate at $125. Okay, and then Chesapeake, Virginia. Small cities like Missouri, in Independent, Missouri, Fort Wayne, Indiana. As you can see right now, that these are markets that don't have much competition. Jackson, Mississippi, Riverside, California. For those of you that know Southern California, Orange County and LA and San Diego, you would not be able to get these numbers because the price of acquisition would be so high. Here, you're looking at on the average of $156 per day, and then here's your monthly revenue. Because if you look at a rental in Riverside, California for a house that's $500, you're looking at about, say, $3,000 per month in your 12-month tenant. Here, you're looking at close to $4,400. Okay, so it's almost double in terms of the return. And then same thing, Visalia. These are small towns, and Springfield, Missouri. So according to the data, it looks like these 8 cities is where the best opportunity is going forward for the Airbnb of 2021. Okay, so I hope you enjoyed the information and got a lot of value out of it. So as you can see, the key is to think outside of the box when you invest in real estate and not get caught up in all the gloom and doom about prices are too high, there's no inventory, and all the negativity that's out there in terms of the market. Listen, we live in a big country and there's opportunity everywhere. You know, a lot of times most people will play in the red ocean instead of the blue ocean. There are 2 different ways to look at things. The red ocean is usually where most people will follow the herd, right? They'll listen to gloom and doom, they'll overbid, they'll compete, and it's never a profitable situation when you play in the red ocean. It doesn't turn out to be a win-win, scenario. Where I like to lead my clients and prospects is always in the blue ocean. The blue ocean is where there's abundant opportunity, there's minimal competition, and you're going to have the maximum return on your investment, especially in the real estate market. Okay, so continue to follow me because that's where I like to really focus on, think outside the box, and not get caught up in all the negativity about, low inventory, high prices and whatnot, because there's a lot of opportunity. Okay, and there are things right now that I want to guide you in the right way so that you take advantage of it while it's still there. All right, so obviously the key is to get in the right funding. That's one of the most important things when you acquire real estate as an investment. So that's where, I'm excited to share my expertise and guide you in the right way. Because if you don't get the right funding, then your cash flow is not going to be at the most peak and optimal, right? So this is where I can really help you get the right funding depending on your scenario. Sometimes it'll be hard money, private money, conventional, non-QM. It's all different based on where you're investing and where you want to go. Okay, so make sure you click the link below and get in touch with me. Set up a consultation, or there's another link where you can just apply online, and I can get to you right away with what you qualify for, what your rate would be, how much down payment, all that good stuff. Now, another benefit is that, a lot of lenders have a cap of 10 properties. I don't have that cap. So whether you want to invest in 1 property, 10 property, or 100, the sky's the limit. Okay, so make sure you connect. Okay, make sure you like, share, subscribe, and definitely take action. Okay, so thank you for watching this, and I'll talk to you again soon.